Although DoorDash grew relatively quickly and still presents potential to keep going, their operations are relatively complex, leading to a wide array of possible disruptions that constantly pose the potential for setbacks. By outlining their operations, we'll gain insights into why even a promising company like this can still readily attract doubt from an extensive and diverse range of reasons. DoorDash operates two main marketplaces, DoorDash Marketplace and Wolt Marketplace, which operate in over 30 countries. These marketplaces cater to merchants, consumers, and the independent contractors called Dashers, who use their platform. They provide services like customer acquisition, order fulfillment, merchandising, payment processing, and customer support. The company makes revenue by charging fees from merchants based on transaction size and charges consumers a fixed delivery fee and service fee that varies based on transaction size. They also have membership programs, Dash Pass and Wolt Plus, which lower the transactional friction. In addition to marketplaces, they offer a suite of services under their commerce platform aimed at helping merchants grow and run their businesses. For Dashers, opportunities are provided for income generation with flexible options. The platform attracts and retains Dashers based on accessibility, flexibility, dashing experience quality, and earnings potential. DoorDash states they aim to make dashing an accessible, flexible, and supportive earnings opportunity for as many people as possible. In 2024, around 8 million people dashed, earning over $18 billion. DoorDash competes with other earnings opportunities, capital sources, and time alternatives to provide a worthwhile and attractive option. To achieve this, they emphasize accessibility, flexibility, competitive earnings, and high-quality service for their dashers. The company's ability to attract and retain dashers effectively is crucial for its growth, as any failure in this area can lead to decreased usage of their platform by existing dashers or a lack of new dashers. They provide incentives such as cashback rewards, quick access to earnings, and regularly test these incentives to ensure they're effective. However, external factors like changes in immigration laws or labor regulations could decrease the pool of dashers, resulting in increased competition for them or higher recruitment costs. In the food delivery sector, they face competition from other local on-demand delivery companies, merchants with own platforms, systems, grocery and goods, and delivery services. They compete for merchants based on their ability to generate consumer demand and the quality of their services. The company relies heavily on merchants for its operation and is susceptible to negative impacts if these merchants do not maintain adequate service levels, significantly raise consumer prices, or fail to meet quality standards. Inflation leading to increased operating costs could cause merchants to adjust pricing, renegotiate commission rates, or cease operations, impacting the company's revenue and efficiency. Additionally, high listing prices compared to in-store prices might damage consumer perception and consequently lead to reduced consumers or order volume. For consumers, they compete based on selection, ordering, fulfillment, service experience, and affordability. Due to all the diverse facets that make up the business, DoorDash is subject to a wide range of laws and regulations in different jurisdictions that cover various aspects like worker classification, labor and employment, commissions, fees, anti-discrimination, product liability, environmental protection, taxation, privacy, data protection, cybersecurity, and competition. The sale and delivery of goods are also governed by laws on food safety, alcohol, pharmaceuticals, controlled substances, hazardous substances, interstate and intrastate transport of goods. These regulations can be complex and subject to varying interpretations, which may change over time due to judicial decisions or new guidance from regulatory bodies. The company has a history of net losses and incurred them in each preceding year until 2024. They achieved net income in the year ended December 31st, 2024, but had an accumulated deficit of $5.3 billion as of that date. The company anticipates increasing expenses in the future due to various investments and expects to continue expending substantial financial resources on developing their platform. These efforts may not result in sufficient increased revenue, potentially preventing consistent achievement or increase in profitability. Stock-based compensation expense related to RSUs and other equity awards will also contribute to increased expenses in future periods. In addition, rapid growth in the past may not continue at historical rates, since future performance can't be guaranteed based on previous quarters or annual periods. There might be a fluctuation and potential decline in revenue growth due to factors such as market adoption, competition, or regulatory costs. The company also plans to invest in expansion, which could potentially offset revenue gains. They also acknowledge that failing to retain existing merchants and consumers or effectively acquire new ones could negatively impact revenue, growth, and margins. Maintaining a strong network with these key players is crucial for continued success. This involves investing in time-consuming efforts to attract and keep popular merchants, expanding into new markets, and managing relationships efficiently. Additionally, the company acknowledges the risks involved in relying on promotions to draw consumers, as well as the challenges of converting those users into paid members or increasing their spending levels. Despite these potential setbacks, the company remains committed to growing its platform by retaining current customers while attracting new ones. As for pricing strategies, they're influenced by factors which might not always lead to successful retention and attraction of merchants, consumers, and dashers. The price sensitivity of the platform is affected by the cost of goods, compensation for dashers, fees charged to merchants and consumers, operating costs, legal and regulatory requirements, competitor prices, and marketing strategies. They anticipate potential future competition and changes in pricing or minimum earning standards that may force them to reduce delivery prices, increase incentives for dashers, lower merchant fees, or ramp up marketing expenses. The company has implemented programs such as Dash Pass and Wolt Plus aiming to retain customers, but admits these initiatives might not be successful. Their expansion into international markets could necessitate further adjustments to pricing strategies due to cultural differences affecting price sensitivity and gratuities. There's also a risk of miscalculations or technology defects in their pricing system leading to underpricing or overpricing, which can negatively impact demand, brand reputation, and operational outcomes. Similarly, there are risks associated with the company's pay models for dashers, such as potential negative publicity, legal actions, government inquiries, and changes in fee structures or rates that may deter dashers from using their platform. The company has also faced challenges related to reclassification of dashers as employees under certain jurisdictions' laws, which could necessitate significant adjustments to the business model and possibly impact financial performance. Overall, the company's growth depends on maintaining a strong reputation and brand, as well as enhancing the local network effect among merchants, consumers, and dashers. They recognize that any failure in doing so could hurt their ability to retain or expand their user base and impact user engagement. The success of marketing efforts, consistent high-quality services, trademark protection, and addressing complaints are critical factors influencing the company's reputation and brand strength. Negative publicity can harm the brand, even if the issues are factually incorrect or resolved without direct financial effects. Factors that could negatively affect the perception of their platform or company include mishandled orders, accidents involving dashers, data privacy breaches, inadequate user support experiences, and perceived unfair treatment of employees, merchants, consumers, and dashers. On the topic of cybersecurity, DoorDash acknowledges they have experienced past cybersecurity incidents and anticipate future attacks. They acknowledge the potential disruption and harm such incidents could cause to their operations, reputation, brand, and financial standing. As their business involves handling personal data and other sensitive information, any cybersecurity breach could lead to legal issues, regulatory investigations, and liability. Moreover, they recognize the increasing severity and sophistication of cyber attacks, including those sponsored by state actors or vendor systems. To address these risks, the company has implemented measures to enhance their cybersecurity programs, yet they cannot guarantee complete protection against potential attacks. Any breach or incident could negatively impact their business and result in a loss of user confidence. So while there's still plenty of room to grow, a wide range of risks need to be managed due to the complex nature of the business. For more on DoorDash and other companies, follow Ascencore. Thanks for watching and have a nice day.